Well, a very good morning again. My name's Craig Martin. I'm the chairman of Dynam Capital, and we're the fund manager for Vietnam Holding. This is a presentation I wanted to have given to the UK investor community earlier this morning, but unfortunately the sound seemed to fail us there. So I've recorded this, and I hope this is interesting for those people who attended the call. So Vietnam Holding is an award-winning fund. We're listed on the main board of the London Stock Exchange. We've received the Citywire Investment Trust of the Year award for 2 years running now. We're also the only AAA rated investment fund manager for closed-end funds outside of Japan. We're a £100 million rather, investment fund listed on the main board of the London Stock Exchange, and we're part of the FTSE All-Share Index. We trade at a very narrow discount to net asset value of around about 1 or 2%, which is significantly better than many of the other UK listed closed-end funds. And that's because we have a strong board, and they have been conducting share buybacks, although recently this year we've not had to conduct very many share buybacks at all, because we put in place this time last year an innovative annual redemption facility. And that effort, combined with the strong performance of Vietnam Holding, we've seen that discount narrow significantly. We're the focused team, focused on delivering outperformance, and we've delivered approximately 500 basis points or 5% of outperformance per annum over the last 5 or 10 years, and even over 15 years, strong level of outperformance against the indices in Vietnam. We're a concentrated portfolio. We have about 23 holdings in the portfolio. We don't use any gearing, and we're able to navigate from the small, medium, and large cap opportunities that we see across many of the interesting investment themes in Vietnam: the industrialisation opportunity, the domestic consumer, and also the urbanisation. Vietnam's a large population, 100 million people. It's young, digitally connected, and that growth in e-commerce is accelerating as modern trade grows in Vietnam. And that's also driven by the urbanisation rate, which at around about 40% is low compared to the rest of the world. China was at that level 20 years ago and then doubled. And that's something that we're seeing grow quite rapidly. Vietnam's attracted a high level of foreign direct investment over 30 to 40 years, and that has helped raise the wealth of the people, and the per capita GDP growth has been around about 6.5% on average over the last 30 years. Vietnam's also a very open economy, and trade represents, exports represent about 100% of GDP, and so it's well positioned in the global arena and punches well above its weight. Vietnam's export story has been one of exponential growth, certainly since the introduction of the open door or the Doi Moi policy in the early 1990s. And we've seen Vietnam emerge as a significant manufacturer and producer and exporter of a wide range of goods to many countries around the world. High levels of growth across categories from food and heavy furniture and heavy equipment through to electronics, and a wide range of export partners. Vietnam exports to China, but also to the US, Korea, Japan, and the EU. So it's trying to be a friend to all, but a servant to none. As a great place to manufacture with a low-cost labor force and high levels of productivity, failure rate for production in Vietnam is low compared to much of Asia. Vietnam's really attracted a lot of foreign direct investment. Some of this is from people looking to reorganize and reorient their supply chains, looking to do more in Vietnam, availing themselves of the free trade agreements, but also of the industrial labor force. So that foreign investment has helped significantly help raise the wealth in Vietnam. But also public investment is increasing at a fast pace. And we see this as a key driver going forward, because that public investment is Vietnamese people's money and savings, and the government savings put into productive use, into infrastructure domestically, which has a multiplier effect on the economic growth. So as I've mentioned, a high and stable level of GDP growth over the last 30 years. And Vietnam's at an inflection point in terms of GDP per capita, where China and other markets were 20, 30 years ago, seeing a rapid growth in the demand for consumer goods and consumer services through an increasingly modern retail trade. So more middle-class consumers, more brands, more opportunities for consumption. But a lot of that is going to be digitally driven. And the e-commerce, the internet economy is growing rapidly in Vietnam, 30 to 40% per annum. China 20 years ago was at the urbanization rate of where Vietnam is today. China doubled in those 20 years. So Vietnam's undoubtedly going to need more housing across the range and across its growing cities. As urbanization kicks in, you get growing productivity, growing income levels, greater labor pooling, and efficiencies and economies of scale. And that urbanization growth also pushes the rise of the modern retail trend in Vietnam. So for us, we look at the opportunities in the equity market in Vietnam. That's the growth set that we're looking to participate in. And Vietnam's emerging from the frontier. It's still a frontier economy. It's the largest frontier economy or frontier market, but it's growing rapidly. And we think that next year it could be included in the secondary emerging market as per the FTSE Russell. Stock market is domestically driven. There's 8 million retail investors. That's more as a percentage of the population than in the UK and in Germany. That's driving increased levels of liquidity that have gone up by 4 times in the last 4 years. So there's great opportunities. The market is attractively priced. We're looking at, for next year, maybe 11 to 12 times price earnings ratio, and yet an EPS growth of more than 15% broadly across the market. And within our portfolio, we're looking around about a 20% earnings per share growth. Relative to its peers in Southeast Asia, it's an attractively valued and profitable market, and it's driven by the high levels of GDP growth and the opportunity set that I've alluded to earlier. So yes, a significant frontier market, but as Vietnam addresses some of the structural issues, they will remove the obstacles ultimately to it being included in larger indices, such as the emerging market, secondary emerging market for FTSE Russell, which you could enter as early as next year, and then in the longer term, the MSCI emerging market proper. We look for good companies, good management teams, priced at a reasonable level of valuation, but with good growth. We integrate ESG across everything we do, and we use ESG looking for companies that have a joined up approach to their environment, social governance impact, as a means to help filter, to choose the great from the good, and also to have a dialogue point with our portfolio companies, which helps us build our conviction level in which companies we're going to invest and how we're going to weight those positions in our portfolio. So we're an active investor, we're not stuck to an index, and we can also be very nimble around our portfolio construction. Industrialization, urbanization are some of the key themes that I've alluded to, that foreign direct investment coming in to manufacturing for export, the urbanization over time being more around the growth in the modern economy and in terms of high quality of real estate and city infrastructure and that modern lifestyle, and a domestic consumer. What we haven't mentioned is how banks play an important role in all of that. They're financing many of those sectors. And so we do have a significant exposure to good quality banks in our portfolio. So across our portfolio as a whole, we're concentrated. We've got more than 55% of our portfolios in our top 10 names, and across each of those sectors that we've alluded to. Our portfolio has outperformed the market. It's also outperformed our peers, our London-listed peers. And that's outperformance both in terms of NAV return, the growth in the assets in the portfolio, as well as a significantly narrower discount to net asset value. I wanted to touch on just a couple of our portfolio companies. FPT, our number one position, is a digital champion, well positioned for high levels of continued growth. It's been compounding its earnings per share by more than 20% over the last 5 or 6 years. A big player of software sales globally, a big business in North Asia, particularly in the Japanese market, where Vietnam has a great opportunity, a high set of graduates coming out from science, technology, engineering, and maths. And FPT is part of that story, has more than 140,000 students enrolled in STEM, science, technology, engineering, maths. FPT is also tying up with a number of content providers in AI. People like Andrew Ng, one of the godfathers of AI, co-founder of Coursera, has been working with FPT in Vietnam more generally in how to help the level of AI education. So FPT is a domestic digital champion. It's also growing in terms of its export of software as a service, as well as software as sales. It has a strong footprint, as I've mentioned, in Japan, but also in the US. So its company management are very confident of its prospects going forward, regardless of what happens perhaps globally around trade. Digitalization is a trend that's set to continue. Mobile World is an omni-channel champion, playing and contributing to the growth of the modern trade and the digital services for consumers in Vietnam. A leading player in many categories, more than 50% market share in consumer goods, in digital consumer goods, more than 55% market share in mobile phone accessories, and significantly growing into the grocery business in Vietnam, with a strong store opening, closing discipline, very much EBITDA focused, and a business that we think is finding a new growth driver, having experimented over the last few years with its store format, and now looking to get good same-store growth, but also improved margins. And finally, Gemadep, a logistics champion, playing to both the import and export position of Vietnam in terms of sea cargo as well as air cargo. A well-managed business, high growth and high capacity utilization in its port operations, and it's looking to expand that in the years to come. So good growth prospects, and it's been a strong performer in our portfolio. So that's the portfolio of Vietnam Holding. That's the prospects, which are strong, high level of growth, a reasonable valuation. Vietnam Holding can be bought readily through the UK platforms or directly under VNH as the ticker on the main board of the London Stock Exchange. We as Dynam Capital remain open for conversations with investors and for providing a high level of information, of timely, relevant information about Vietnam Holding and about the Vietnam market more broadly defined. We thank you for your attention and look forward to speaking with you again.